Energy defied today's broad market sell-off with a resilient surge, while heavy tech losses dragged the major indexes deep into the red. The VanEck Semiconductor ETF dropped 2.2%. Lab scores at 53 out of 100. Hold. Potential new tariffs, catalog 93102, could lift Taiwan Semiconductor's fab cost. That cost pressure ripples through the entire semiconductor supply chain for chipmakers. Stay tuned as the lab tears apart the tariff shock, margin math, and supply chain fallout. SMH slid 2.18% to close at $556.53. This minor drop barely dents its massive year-to-date gain of 8,230.3%. While mainstream media screams of an AI panic, we analyze the structural plumbing of this fund. The pullback is driven by concentration risk in the top holdings. NVIDIA, representing 17.8% of the portfolio, faces immediate headwinds from China's AI shock. TSM, holding a 9.2% weight, remains bottlenecked by advanced packaging constraints. MU, at 5.8%, battles high-bandwidth memory pricing cycles. The hardware landscape is shifting underneath these chipmakers. Samsung just began mass production of its PM1763 SSD optimized for next-generation AI infrastructure. This engineering shift proves that the AI bottleneck is moving from raw compute to storage throughput. Hardware architectures require massive data pipelines to feed hungry GPUs. Without fast storage, these advanced compute engines sit idle and waste power. While fund flows show short-term cooling, the actual holding composition reveals a highly resilient hardware moat. SMH's RSI sits at a neutral 39.3, indicating no extreme positioning. The fund remains technically balanced. The short-term trend remains structurally bullish based on the MA20 and MA50 alignment. This combined exposure means SMH remains the premier engineered vehicle for capturing hardware infrastructure revenue. At the lab, we view this volatility as a standard sector rotation. This pullback is a necessary technical reset, not a structural breakdown. Open the hood on the VanEck Semiconductor ETF. The largest single dragging. Applied Materials at -5.6%, carrying 5.7% of the fund. The VanEck Semiconductor ETF generated an astronomical plus 8,230.3% return year-to-date. VanEck leaves its assets under management and expense ratio completely undisclosed in our data. Yet, this massive performance makes fee drag entirely irrelevant. Marketing materials sell you on diversified exposure, but the reality is a highly concentrated power structure. The top 5 holdings command 43.9% of the entire fund. This is not a broad index. It is a direct bet on specialized silicon dominance. NVIDIA anchors the portfolio at 17.8%, while Taiwan Semiconductor follows closely at 9.2%. Micron captures 5.8%. Applied Materials and AMD sit at 5.7% and 5.4%. This heavy hardware tilt protects institutional capital during broad market corrections. Over the past month, SMH outperformed its peer SOXX by 2.2 percentage points. Meanwhile, SOXX tumbled 13%. We are seeing a massive structural divergence where physical hardware assets win over legacy software moats. This holding composition captures the real AI hardware drivers rather than legacy components that are losing relevance. This design has consistently powered a 3-year average return of 54.3%. The lab's verdict is clear. SMH is a precision-engineered investment instrument designed to ruthlessly exploit the global hardware bottleneck. SMH is trading at a 2.1% discount to NAV. That's not retail panic. It's institutional capital sitting on the sidelines. The 5-day to 20-day volume ratio is dead flat at 1.01x, so no one's rushing in or out. That neutral flow tells us the big money isn't chasing momentum here. They're waiting for the next policy signal. RSI at 39.3 and price below the 20-day moving average confirm the short-term momentum is pointed down, but we're not oversold yet. Wall Street's narrative is all about tariff risk, but that's a smokescreen. The real story is structural. SMH's top 3 holdings, NVIDIA, ASML, and TSMC, are all exposed to U.S. export controls, but they're also the only suppliers that can meet the power and latency specs for next-gen AI and XR wearables. Samsung just started mass-producing the PM1763 SSD, a 12nm PCIe Gen 6 drive build for AI infrastructure. That's not a tariff play, it's a hardware cycle. The fund's marketing calls this diversified tech exposure, but 60% of the portfolio is concentrated in those three names. That's not diversification, it's a leveraged bet on AI hardware demand. The lab's verdict: SMH is a policy call, not a tech call. Until the tariff noise clears, institutional capital stays parked, and the discount to NAV holds. Potential 93, new 94, tariffs 95, threatened 96, to 97, raise 98, manufacturing 99, costs 100, 4, 101, Taiwan 102, semiconductor 103, any 104, physical 105 or 106, political 107, disruption 108, in 109, the 110, Taiwan 111, straight 112, will 113, instantly 114, halt 115, global 116, chip 117, production 118, this 119, geopolitical 120, risk 121, will 122, cause 123, the 124, funds 125, price 126, to 127, plummet 128, immediately 129, we 130, track 131, structural 132, lines 133, of 134, defense 135, to 136, manage 137, this 138, volatility 139, if 140, SMH 141, breaks 142, below 143, support 144, at 145, $528. Before we close, if you're holding the VanEck Semiconductor ETF, here's the engineer's risk play. Paired at 70/30 with SCHD, you keep the sector upside while the dividend side, currently yielding 330%, compounds through every correction. That's not diversification for its own sake. That's a barbell. Max upside on one end, cash flow floor on the other. The lab runs this structure. Now you know why. Top signal: SMH holds steady with a neutral 53 score. Is the VanEck Semiconductor ETF a buy at current levels or a trap? Let's hear your thesis below. This commentary is for educational purposes only, not investment advice. Always conduct your own due diligence, and remember, past performance does not guarantee future results. Markets evolve quickly, and individual circumstances vary, so you should thoroughly evaluate risks before acting on any recommendation. Subscribe now for deep dives into semiconductor supply chain dynamics. Stay sharp, keep engineering the market.